Hi there, welcome to this week's market analysis. So as usual, what we're going to do is to share with you a summarized version of what has happened in terms of the risk event for the last week, and moving forward into the upcoming week, what are some of the events that you want to take note of, and after which we'll go on to the chart and share with you some of the major technical analysis and opportunities that you want to pay attention. Now, as of last week, the main focus was actually on the various speeches from ECB, BOE as well as the Fed. It did not really give much of a huge volatility in the market. And to end off the week, we do have the US core PCE price index, which we started to see it missed the expectation of 0.4, and the dollar actually experienced a little bit of a sell-off. Okay, not a major one, but with the PCE price index actually falling short of expectation, perhaps the Fed might not need to be so aggressive in hiking rate, and of course the market is starting to price in a little bit of that, and we actually see the dollar weakens perhaps from the profit taking on any of the long positions that some of the traders might have. Now, going forward into the upcoming week, okay, now over here we do have a couple of course important data. First off, to start off the week, we do have the Australia RBA rate statement. Okay, so you can see over here the market is actually expecting a 0.5 hike from RBA this time around. Nothing surprising. Again, we are expecting the central banks to be hiking, so we'll need to see the statement as well in terms of forward guidance, what the RBA actually released. Okay, then moving forward, we have the FOMC meeting minutes on Thursday. Okay, depending on where you are, over here in Malaysia, it's gonna be on the 2 a.m. midnight. Hey, do take note of that because it can create some kind of volatility in the market as well. And of course, if you've been trading for some time, you know that first week of the first Friday, right, of the month, we do have our usual NFP, average hourly earnings, as well as unemployment rate from the US side. And this time around, we of course have also the Canadian labor data. Okay, so Friday is definitely going to be a very volatile day. Some of the traders actually choose to focus and specifically trade the NFP. Okay, so if you do, just take note of potential volatility involved as well as risk involved in doing so. Right, so that's the overview of some of the risk events that you might want to take note of for this week. So with that, let's jump on to the chart and share with you some of my perspective and analysis on the market. Now, to start off, let's take a look at the dollar index over here. This is based on the 4-hour time frame. So what I'm seeing over here is that the dollar hits a little bit of a resistance zone as of last Friday. Okay, and we do see a little bit of a reaction over here in which the market is yet to be able to break above that, and therefore going into this week, I'll be holding on to a slightly bearish perspective, and of course I'll be more interested to look for a sell opportunity until proven otherwise. Okay, and by that I mean as long as the market is able to maintain below this high of 105.55, then there's a higher probability that we can see the dollar actually hit lower, back towards, let me just change this, back towards the 103.40 area. Alright, so of course this would give you an overarching direction in some of the FX pairs as well as gold or related commodities that is of course trading against the USD, right? So this coming week, my bias as of now is to be slightly bearish on the dollar until proven otherwise. Now with that said, if you take a look at the euro dollar over here for the week, okay, we kind of had a little bit of an inverse pattern over here, right? So we have like double bottom, okay, on the euro dollar, and I'll be looking at a short-term bounce, which means that this week I'll be mainly looking at potential buy opportunity on the euro towards its previous high at 1.0600. Okay, and as long as the market is able to maintain above 1.0370, I'll be holding on to a slightly bullish perspective, and look out for buy opportunity on the euro dollar, at least for the short term, back up towards, as I mentioned, 1.06. Right, so that's on the euro dollar side. If you take a look at the pound dollar, okay, it's kind of similar, but there's a slight difference because pound dollar did not really put in a double bottom as of yet. Depending of course on how strict you are in defining that, we did see price actually came back towards the zone, okay, which has a little bit of a reaction and a bounce as of now. So again, you know, depending on the aggressiveness of your trading approach, your strategy as well, do you really consider this as a potential double bottom that has been formed, or is this not a double bottom and you perhaps want to be patient and see if the market actually come back and retest for another time? Okay, now there's no such thing as like perfect strategy, perfect analysis, or you know, 100% guaranteed kind of move in the market. Okay, we are often dealing with probability. So overall, okay, that's why it's important to look at the dollar index, because if the dollar is likely going to be falling, okay, there's a good probability that some of these major pairs would follow suit. Okay, in other words, pound dollar might probably see a little bit of the upside from here. Okay, so it's not the best one right now, it's not the clearest. If I were to pick among the euro dollar as well as the pound dollar, I would probably focus a little bit more on the euro dollar because of how the pattern is actually clearer as compared to the pound, right? So over here, do pay attention to this. Of course, there's a good chance this might come down a little bit more. If it's gonna come down slow in nature, perhaps a little bit of a divergence over here, forming that double bottom eventually, then there will be a good probability that you want to focus on the upside on the pound dollar as well. Okay, next up, we do have the Aussie and New Zealand over here. Now, one thing to note is the Aussie has actually broken below this structure level over here, and it's a very clean break, right? But I would suggest you to be a little bit more patient, because what can happen is that this can still really impulse back up, and that will give you a V-shaped formation, and you know, from there, from a hindsight perspective, you can call it a false breakout. Okay, so there are times where the market does that, so you want to just be patient, and I would strongly suggest you want to just give it maybe 1 or 2 days going into Tuesday. And of course, we have the RBA rate statement, right? So you might want to even wait for that to be released and see how the reaction on the Aussie dollar is going to develop before making a decision as to whether you want to buy or focus on the sell side. Okay, so a couple of things over here. We did have this break of course. Okay, so what I want to see is, if today I want to sell the Aussie dollar, I first want to see this form as a consolidation below that structure level. That will give me a high probability of a sell trade. However, okay, if let's say next week we do see a pulse back up and this forms a V shape over here, and more importantly, if this forms a consolidation back above that level, okay, this can be a false breakout, and this can probably start to hit higher as well. Okay, and of course you can put in a trend line over here in confluence with that. Then you want to be looking for a breakout to the upside. Okay, so again, you need to observe how the market develop, and as I suggest, likely give it a little bit more time. Perhaps wait until Tuesday RBA rate statement. See how the price develop, what pattern you see, and then you make a decision from there. Okay, the Kiwi Dollar is actually quite similar to the Aussie, right? Both of this, we have a term called sisters pair. Okay, because most of the time Aussie and Kiwi, they move quite correlated. Okay, so you look at the pattern, it's kind of similar over here. The overall analysis and process is the same. If this is going to consolidate below it, there's a good chance you can look to sell it. Okay, alternatively, if this actually impulse back up, forms a little bit of a consolidation here, and you can see we have that trend line very nicely as well, then you want to be focusing more on the upside instead. Okay, so both of these are quite similar. Now next up, we have the dollar Canadian. Now dollar Canadian is actually still stuck within this channel. Okay, and we can see that this move up is rather corrective in nature, so not surprising that this is going to make another move lower and break below this level. To potentially complete this 1, 2, 3, and then another 1, 2, 3 over here to give us a bigger flat pattern. Okay, this is part of the Elliott wave pattern here we call double zigzag, or sometimes you would see us just label as WXY. Okay, so over here, if I use a little bit of a Fibonacci expectation, there's a good probability. Of course, it's not going to be 100% picture perfect all the time, but this might likely develop as a 1, 2, and then 3 before that bounce, right? So this area might be a better area to look for a buy. Again, we need to definitely see how the market react and develop throughout the week. Okay, so dollar CAD, it's not a sell trade yet for me. Okay, because this is definitely not a strategy for me to take to the downside. But of course, you know, different traders are different. If you have a technique, you have a method, and it aligns with a strategy to actually take a sell back down lower, then you can really keep an eye on around that price point of 1.2710. There might be a reaction from there, and you know, a bigger reversal might happen from that price level. Okay, so keep an eye on that. For me, dollar CAD is neutral as of now. Going into this week, I want to see how the market develops from here. Now, next up, we have the dollar Swiss franc. The dollar Swiss franc is a trade that I would say you want to definitely keep a close watch for the week. Okay, dollar franc, we have a couple of elements coming in. So you see over here, we have this bottom, so a potential double bottom. And the price has actually developed as a diagonal crawl. If I were to bring in the RSI, okay, we do see a very nice divergence as well, and therefore the higher probability as of now is actually more upside. Okay, so of course this price action doesn't look very convincing as of now, but again, different traders have slightly different strategy. My suggestion over here is perhaps you want to pay a little bit more attention to the upside opportunity, right? So again, depending on your technique, depending on how you're going to execute a trade, do look for upside opportunity. I think the upside can be huge, okay, because your final target can be all the way back at this previous double top at 1.0050. Okay, huge upside opportunity on the dollar franc. Now, next on the FX side of things, we have the dollar yen. Now, the dollar yen is showing a little bit sign of exhaustion over here. Okay, if I again bring in the RSI, we have a little bit of a divergence. We suggest a potential reversal is coming. And based on this pattern over here, we have the neckline around 134.30. Okay, so the traditional way to trade such a pattern would be to trade the break below this for potential sell towards perhaps the next immediate level at 131.5. So this is a simple potential trade idea that you can consider. Of course, if you're a bit more conservative, you might want to wait for the break, wait for the pullback, and then you trade the pullback instead. Okay, so really depends on individual strategy. Okay? So do keep an eye on the dollar yen. I think that's a good opportunity where you can catch the downside, at least for the short term. Okay, and this is of course in line and in confluence with the dollar weakness that we have anticipated, and the overall direction that we're looking at for the week as well. Alright, so those are the major FX side of things. If you take a look at gold, okay, gold is rather interesting because last week we came back and test this previous bottom, okay, and we kind of see a little bit of a V shape, very nice rejection. Okay, overall gold is actually still within a consolidation. You can see over here, price has yet to break this low, has yet to break that high. So when you're looking at this, you want to be adopting a range bound mentality where look to buy at the bottom, and then of course look to take profit at the top, and then potentially you can look to sell at the top as well. Okay, so as of now, gold did give us a very nice rejection at the bottom. All I want to see right now is for the market to give me a tiny bit of consolidation over here to indicate that the probability to the upside is still high, and that will be a very decent trade opportunity with a potential target back at the previous high at 1870. Okay, so I think gold this week you might get an opportunity for a trade. Do keep an eye on that as well. Now lastly, we have the equities side of things, and then we'll jump a quick one onto crypto side. Okay, So Smp Index over here, we do see the market pull back last week towards the 50 and the 618 Fibonacci, and we have a bit of a reaction there. The market did not break lower. It's still early days right now to say whether we're gonna see more upside in terms of the equities, but at least for the short term, I think there will be a short-term bounce, perhaps higher. Okay, to be very conservative, we can look back at the previous high, had a little bit of confluence there. Of course, it might go a little bit higher for an extended target here. Okay, so if you're looking at equities, I think this week you can primarily focus on a little bit on the upside short term. First target here in Smp is 3930. Okay, and the second target you can look up for is around 4050. Okay, so quite straightforward, but of course, in terms of how you're going to execute and enter a trade, you need to have a proper strategy. Now lastly, on Bitcoin, on crypto, I think short term there might be a potential we can see a little bit more upside towards 22810. Again, this pattern here is a diagonal. We do have the divergence there as well, which suggests a short-term reversal and short-term bounce. But for me, while the pattern is valid, okay, I think from a fundamental perspective and a sentiment perspective, trading Bitcoin right now is definitely very speculative and definitely of a higher risk. So if it doesn't fit into your risk appetite and personality, my suggestion over here, of course, is to just simply avoid the crypto market for now. But of course, you know, if you're someone who has experience in the crypto scene, you're actively looking for opportunity, then I think Bitcoin this week, at least for the short term, might give you some chance to look for a buy setup towards 22810 from a technical perspective. Alright, so that's all for me for this week's weekly update over here. I hope it helps, and of course give you some ideas and insights into what are some of the trade opportunities you want to keep an eye on for this week's ahead. All the best to your trading, and I'll see you guys in the next one.